Podcast. My name is Brian Belay, your host from King's Crowd, and I am joined with Retail Joe here. That is Scott Katoon. Thanks for joining me, Scott.
Of course.
Now, we took a little hiatus over the past week or so for various reasons. Actually, most of the King's Crowd team and the CrowdCheck team were in Washington, D.C. last week, meeting with different regulators, with the SEC, with some people in FINRA, as well as going to the Regulated Investment Crowdfunding Conference. That is an annual event, and I am actually going to be the incoming president of the board of the Crowdfunding Professional Association next year. But for anyone who has not heard of them, it's a great opportunity just to meet with other people who are trying to move the industry forward. There's a lot of focus on the regulations, what we can do to improve Reg CF and Reg A, as well as talking about Reg D to be able to bring more access to capital for entrepreneurs and more opportunities for investors. So very well aligned with what we champion here at King's Crowd. This week, though, a couple things I think Scott and I want to get into. First topic, I'm going to tee it up. So in the news recently, it was announced that Morgan Stanley basically agreed to buy a secondary trading platform called EquityZen. Now, probably many of our investors are familiar with EquityZen. It's a company like Forge Global. Basically, it allows you to invest in pre-IPO shares. Typically higher minimums, right? We're probably talking like $10,000, $50,000. Oftentimes, they're getting those either from funds that might have them offering as secondaries or employees, right? So an employee wants to get a little bit of liquidity, they can list their shares there, sell it to other investors. Now, for various reasons, this is a little interesting because, EquityZen being one of these online private market platforms, Morgan Stanley being this really big, kind of wealth management, being able to bring both supply and demand side to that infrastructure. But Scott, I know you saw this in the news. We were talking about it a little bit before the pod kicked off today. What do you think of this? What is this kind of talking about in terms of the industry?
I mean, for one, it puts a cap on a hell of a run because EquityZen I feel like the last 12 months has been on an absolute tear. To put in context, why would someone buy this and why not Forge or whatever the other one was?
Forge is also up for sale. I will just mention that.
Oh, I'm sure. Yeah. Which, by the way, usually when you have a for sale sign, not the best look. But here's why this happened. Secondary volume in the last year, not even year, half. The first half of 2025 surpassed $100 billion, which, by the way, Evercore did 52% of that. They were the advisor on 52% of it. 100 billion secondaries in one half of a year. That's insane. So if you're wondering why would someone do this, why would they buy this company? Because they want that. They want to compete. They don't want to have to keep cutting checks to Evercore. Mm-hmm. So they bought it to go direct, and they can let people go direct the way that EquityZen existed. And I'm sure it will exist. And this is a prelude to another conversation we're going to have later in the show. It's just the evolution of this market. I think the idea that going direct was like the democratized XYZ. We've talked endlessly about the Trump 401 Retirement Act and retail and all the things that are going on in this space, which are crazy. It used to be your feature set of the product is that we let you invest direct. That's what we do. It's different. Now everyone is going to be able to invest direct and have their own control, I think, at almost every level of private and public. And it's just a matter of time before they all have their portals ready to go. But I don't think the thing that I think, and I could be very much wrong here, but this is my hot take. I don't think it's really going to change the volume that much in individual investing. I think that there's still going to be, they figure what percentage of EquityZen members are also banking with us anyway, and we can kind of slide the funds over. I just in general think that all these big banks and big investment platforms want you to be able to get a little bit individual investor style from their funds and their offerings, but they still, generally speaking, are going to do this in large sums would be my guess. But it is definitely cool because, I think it's probably the beginning of what will be a 9 to 24 month hot streak through the portal world that you and I live in.
Yeah.
I doubt this will be the last.
No. So, and again, these are secondary platforms, obviously focused on accredited investors. You have to be accredited to invest in the secondaries through both of these. But we've seen a lot of activity in the retail platforms, right? We've had various acquisitions, even just over the past 12 to 24 months. And one of the other things in the news today, whether confirmed or not. But apparently, the company that's behind the Trump meme coin, so Fight 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 LLC, was apparently in discussions to acquire or partially acquire. I'm not sure it's been fully kind of disclosed about what's being discussed. The U.S. arm of the crowdfunding platform Republic. Now, this was kind of a shock even to us at King's Crowd of just unexpected, right? Hadn't heard anything, and then this kind of comes out of the blue. On the one hand, I can see a little bit the tie-in to the digital asset side, where Republic definitely has a focus on digital assets. They've done a lot, and I think we can, even talk a little bit about MIRA tokens, how that's been going. But yeah, Scott, any words to share or anything you can say in terms of the potential talks there in that news?
Yeah, I will start by saying, full disclosure, investor, obviously, I had a text conversation with a very good source, someone who would know there. And his words were as a bullshit rumor. That said, they've partnered with groups like Fight 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 and others. That's not just the first one to use their infrastructure. They've had a white label infrastructure technology tool that's a decent amount of revenue for them for many years. This is not new. I will say, when I saw our lovely producer Sam sent that to me this morning, I actually believed it at first. Not because of the relationship. I know that they have relationships with Trump's group and others, and that, again, in the token world, it's not uncommon. I mean, Binance was an investor, I believe, in Republic, so there's connections across all these things. And like you said, they're very much in the token world and working with Solana and all these big groups, or Avalanche. Sorry, maybe they are Solana, but it's Avalanche is their big one. They bought the INX exchange. Like you get the gist here. I immediately thought that this could be true because they just spun out Republic Digital like a couple of weeks ago and turned that into a digital token frontier tech hedge fund that their former CIO, well, he's still part of it. I mean, they still have an ownership stake in that business, but like they spun it out from under Republic. So when you do that, it's like, okay, so you've moved a $300 million fund out, and then this comes next. It's like, okay, like you guys are making the moves that would either align for a sale or a consolidation or even acquiring somebody else. So I did believe that that is possible. I don't think it's true. I don't see why they would sell unless it's an insane number. Like this would be, even as a merger, you wouldn't sell to a single token project. And unless that token project had the goal of leveraging a portal to expand which I'm not saying that Trump's group doesn't, and I have no inside information on this. They could expand into a bunch of stuff. I think the article talks about all these different assets they can do. That's not where they make their money. So like Trump Stakes and Trump University is a thing in the past. They figured out better grifts than those to make money. So like I'm not really, I just don't think it's a great fit. It would be surprising. I know the article said that the Fight 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 was going to raise like $200 million in addition. Republic's $1 billion company. Like they do real money. They do real revenue. So like it would be a little surprising that even as much as money as a Trump token and Eric Trump's team has built with this, and it's a lot, that they would be able to cash bite $1 billion, or that Republic would say yes to a deal that's under that. Like that. So there are technical pieces of this that to me I would say unlikely true.
Yeah.
But go ahead. No, go ahead.
Well, I was just going to say the caveat, at least per the article, right, is it was for the crowdfunding portal, the U.S. crowdfunding portal, which is probably a very small piece of the overall Republic umbrella, which would make it a little bit different. But go ahead. I was going to also have a spin off to white labeling and potential of kind of like the application.
No, so you're right. So that's the but. Like they were vague about the portal. Are they buying the portal? How does that work? I don't know why you would buy the crowdfunding portal when you could just white label infrastructure. So like, to me, it's just like, we've all been in this business long enough. I don't think there's enough money to be made in the economics of just straight crowdfunding just as a portal and that's all you do is worth it. So maybe they are going to sell it. I don't know. Maybe it's just easier to get rid of that expense and they keep their infrastructure and the legal and the technical and being on chain, which is what their business is now anyway. And so that's just getting rid of it to make it easy. And now every project they do will be on chain, which goes to a larger thing. And then I'll hand it back to you, that the tokenized thing is like really real. And I know we've joked about it, and I still to this day, it's a feature, not the product. It's marketing, except for when it's not, when it literally is what facilitates, deals to be done that couldn't be done before. this stuff has gotten to a point where I think most assets are going to be available this way pretty soon. And I think that Republic has led the way in that. We'll talk in a minute about the mirrors and things like that. But like I guess this is the consensus here, to me at least, is we throw the word crowdfunding around a lot as if just raising money from the crowd is crowdfunding, which I guess technically that is like, maybe that's the definition we should have left it at. Crowdfunding is when you raise money from the crowd. It has nothing to do with regulatory. Mm-hmm. When I think of it, and this is probably being too much of an insider, when you say crowdfunding to me, I think Regulation CF. Mm-hmm. I immediately think of $5 million limit and all this other stuff. And most of the deals that are being done tokenized are either crowdfunding Reg CF with a limit, or they're Reg A+, or they're Reg D, 506C. And that has everything to do with the expected amount raised, demand, and minimums, and like they know your investor. And if they have a whole bunch of people who are accredited and they're going to write, $10, $20, $50, $100,000 checks, there's no need to do a Reg CF. They just keep it a Reg D and they'd call it a Reg A or whatever. And here, I feel like crowdfunding, Reg CF, crowdfunding, all these things are just getting more and more used and important. And you're seeing more and more of these platforms, investment platforms, either buying up, investing in, copying, partnering, whatever you want to say, to be able to offer regulated securities, which is where the Reg CF, Reg A+, and Reg D, Reg S come into play. And you know that world. You're going to be the prez, so you know that world better than anyone. That's what I see coming on here. So again, that's just yet another reason why it's like, why does token buy the portal? Why does Trump token buy the portal?
Yeah, that was my only thought there too. Of I'm sure they're probably in discussions about something, but yeah, who's to say it isn't white labeling? There are various platforms out there that provide the infrastructure. Because to be clear, to be able to get a funding portal license to be able to raise funds under Reg CF, it can be a 6-month, 12-month process going through FINRA, working the approvals. If you buy into a platform, I have heard of at least, people kind of looking to try and fast track that process. Instead of having to wait 6 to 12 months, you can acquire a platform that already has the funding platform, funding portal license, right? And then kind of tweak it for your own use. Not saying that's what's happening here either.
Well, unless of course your dad is the president, in which case I suspect that timeline is a little truncated, like 0.
Yeah,
would be my guess.
But there are other platforms that essentially, right? So, I mean, Dealmaker is a good example of this. They have a funding portal and a broker dealer, but a lot of those kind of look more white labeled. So it could just be more of the infrastructure, the tech, right, that they're looking to kind of get into. But so talking about Republic, right? They launched their mirror tokens, I believe it was probably a month or 2 ago now that the first one, SpaceX, went live. They've since done various other ones. I can kind of pull up the quick screen of what we've got here. Now, mirror tokens are being done only to accredited international investors. And the thing that's unique about them, at least today, and they're allowing reservations as well, kind of like under testing the waters. So there may be future potential Reg CFs, but that's a little bit unclear. There hasn't actually been a Form C filed yet to my knowledge for any of these. The reason these are different, as we've explained in the past, so I won't spend too much time on it, is that the tokens are basically kind of futures or swaps, or basically being able to give you exposure to the underlying asset without actually having any shares in that asset as the investor. So some of these companies may not be affiliated with Republic or the offering at all, but basically Republic is saying, hey, us as the intermediary, as kind of this like individual or intermediate broker, we're going to pony up the shares or whatever else to say that when this company IPOs, we will give you the number of shares that you've kind of, quote, invested in. So you may not get dividends. There's a whole bunch of other restrictions, and it adds that other kind of third-party risk of the issuer, in this case, Republic Core, I believe, is the issuer, where you need to make sure they're still going to be around. But bringing it back to mirror tokens. So they've been going on for a while now. There are some different positions in the industry in terms of, what people think about them, whether it's actually good use of capital, right? Because some people may say that the money is going to Republic. Republic is holding that, but it's not actually going to the company. Those funds are not getting to that company. So it's not supporting jobs. It's not being able to support product development or other things like that. So in that sense, it's kind of a synthetic investment vehicle. But On the other hand, you could take a look at this and say like, hey, this is bringing a whole bunch of more awareness just to the fact of investing in private companies, right? And bringing more people to republic.com. Maybe they then find out about Reg CF or Reg A. So given that we're maybe 2 months in now, Scott, I'm curious, what's your take on MIRA tokens in terms of just what's been offered and the potential there?
Yeah, I mean, we touched on this when they first came out. For one, again, this is according to Republic's website, but you don't have to be accredited to invest. It is worldwide investors available, $50 minimums, non-accredited. So they're using Reg D and Reg S, and they're basically raising, I mean, for lack of a better term, an SPV that allows you to have a set price, and anything that company sells for above said price is a pro rata rev share. It's not actually a rev share, but in my mind, that's a rev share. Is basically we're saying, hey, we either have the stock and we're selling, at a certain price, or we're going to get the stock at a certain price. I know that they have partners that most firms that we're talking about here don't have, whether that's Valor or Binance or others. They have access to plenty of people who have on the cap table positions with these companies. But it is a forward contract, which I think that's the biggest debate that could be had. And we could debate this literally until we're blind, whether you think it's good or bad. I think if everybody's doing it, I don't see how it ends up being great unless there are limitations in place. Robinhood thought it was novel enough that they did it. They worked with, I believe they worked with Republic to do it. They caught some shit when OpenAI said that they didn't give the shares, but those guys didn't know what was going on. They were just like, they thought the founders thought that somebody was selling shares. They did whatever. And that's the problem with forward contracts and MIRAs in general. But I will say, and again, obviously I'm a huge fan of Republic and those guys, but it is a novel approach. If you were going to tokenize something, sometimes it can be difficult to tokenize an asset that unless you're a direct investor in it. So then if you can't get into certain deals or the company becomes a bigger deal later, then you just wouldn't be able to offer it. So then it seems like not a great product for customers. So I think it makes sense that Republic looked at it like, hey, we want to tokenize late stage venture. We know that there's SPV lasagna going all over Silicon Valley, people doing secondaries on top of secondaries on top of secondaries. What if we contacted basically all of the funds and firms that have invested directly in these groups and said, hey, you invested at 40 million, now it's $1 billion or 100 billion or whatever it is. We would buy shares based on our demand side of 10 million worth or whatever the number is. And then they market there. I'm sure they mark it up a little bit so they can pay for their effort. And then they sell it back to everyone as a forward contract called a MIRA, which is tokenized. And when that company has an exit event or whatever the case may be, the money is going to go directly to the original investor who has then sold its secondary share to Republic, and then you get paid. And it's probably one of the least SPV, spaghetti, lasagna, whatever you want to call it. When I say that, I mean layered fees. The original fee, and then another SPV has a fee, and then another guy's got a fee, and you, the investor, end up with jack shit. This is probably the safest way to do it. So I like it. I will tell you, just looking at the volume that they're pushing out, clearly, and I know Chuck Pettit, who works at Republic, has said publicly several times, this is product market fit for them. So This is clearly working for them. And the finances have to be working. And to be honest with you, the economics, we talked about this before, the economics of crowdfunding is not that great. So if you can find a product like Databricks, ByteDance, Canva, Ramp that sell themselves, that makes the economics maybe a lot better than if you're trying to sell a no-name startup that's just trying to wrangle a couple $100K. This is in the millions, much easier to scale.
Yeah. So I will just add, one observation, and I may be, incorrect on this, but while they say it is no accreditation required, I don't think they've actually launched any officially yet. So they have reservations, which is basically testing the waters under Reg CF.
Yep.
But none of those have gone live. So we haven't actually seen the filings. The ones that are live are being done under Reg D and Reg S. Now, the only reason I bring that up, so going back to the discussion at the CFPA Summit in DC last week, Commissioner Peirce from the SEC, who's normally there's 5 commissioners, I believe. There's currently only 4. One of the reasons that she was asked a question actually on mirror tokens in particular, and more broadly in terms of structured vehicles like the token. And go ahead and watch it. I don't want to speak for her in terms of like what her response was, but I think the takeaway, right, is that it's still something we haven't seen a Form C filing yet. So until we see that, I am a little bit curious how it's going to be done under Reg CF if it is done. Now, that being said, you can't imagine that Republic is going out there and offering this if they haven't already been having some of these discussions with regulators.
Oh, I'm sure. Yeah.
And that was one of the things that Commissioner Peirce said is like, hey, anyone who's interested in doing this, come and talk to us being the SEC, so that they can kind of talk through it. So you've got to imagine that Republic's been having those conversations. But to Scott's point, like, yes, there are lots of these offerings. These are huge names. There's always tons of interest, right? When you talk about names like SpaceX, Perplexity, Anthropic, anything like that. When I've seen SPVs in AngelList and different places for these, like, they get filled very fast, right? There's a lot of demand for it. So I can definitely imagine that Republic, as the platform that's kind of offering these, is seeing the interest there. But, that being said, in terms of just, I think mirror tokens as a concept of just where the industry could be going and tokenization in general is an interesting one. So I don't, Scott, have you actually, if you're willing to share, have you committed to any of these, or have you taken a look at any of these yourself?
I've looked at them. I'm actually looking at one right now, but I have not invested in it yet. And it's not for any particular reason other than like, I don't feel like investing a tiny amount of money in some of these, because you're not, generally speaking, I'm not saying this for everything and certainly not investment advice. You're not looking at 100 or a 500x. You're looking at like a 2x or a 3x or a 5x, maybe if like a big IPO. But like, let's just say like they've talked about OpenAI. OpenAI, there's all kinds of ads floating around. God knows if they're real, about trying to have an IPO in the not too distant future at $1 trillion. An IPO at $1 trillion. I can't short that shit fast enough. Like I can't fill out enough contracts on Robinhood to short that thing. And I'm not saying it's not going to be $1 trillion. I'm sure it will, but like, that's just crazy. So at $1 trillion to get 2x, it's got to be $2 trillion. The largest tech company in the history of the markets, NVIDIA, just hit $5 trillion. So I will get 5x if OpenAI hits $5 trillion. Or like if it's at anything under $1 trillion, I lose money. Do you know, like, contextually, that's insane. And that's the problem. If you look at some of these, I like the attractiveness of a lot of the companies that Republic has. They're all the best of the best. They're the top 20 secondaries by demand. And they're probably the top 20 IPO, wannabe banked IPOs by demand. But when you're shifting it 4, 5, 600 billion, 200 billion, 100 billion even, this is a lot of money. So if I believe in the company, which some of these I certainly do, or like long term, I would probably want to put 25 or 50K in to see the kind of returns, to make it worth the money. So I haven't done that because I'm not putting 25K into something that just started yesterday. Not yet.
Totally great. It's that different like risk reward spectrum. These tend to be later stage, super mature. So probably less chance of failure, but because of that, you're going to have a more limited upside. For that reason, similar to you, I've taken a look at a few of these. I am a little bit curious. I might, throw a little bit in there in one of them just to see how it works and can report back a little bit more, right? I think for that as just Please like the educational aspect, maybe I could do that for you. But I'm not going in investing seriously, at least today, bigly in any of these. Well, anything else before we sign off, Scott?
No, I think all I can tell you and those listening is it's just keep paying attention, because this is the most. We sat dormant for probably 5 years building in silence, and no one would have ever called either of us to ask us shit. And now it's like nonstop. Every week there is another thing for us to hop on the pod. And it took a couple of weeks off with this, the event, and then you guys had your investment crowdfunding week or whatever. Like we probably could talk for 2 hours. There's like 5 stories we didn't even get to. And we didn't even talk about debt deals. That's a whole nother thing. Like this, we are in a very new world where you're seeing all this technology converge at the exact same time as all this interest. And it is incredibly fascinating. And just you and I sitting there trying to connect the dots and see where things are going to land. And I have no idea.
Yeah. I mean, just to put the cherry on the discussion as well, one other thing, right? There's Reg D for only accredited investors. One of the big things that determines if you can invest with that or not is whether you're an accredited investor. And there's the definition. So there's always been a lot of talk, and there still is a bunch of talk around potentially changing the definition of the accredited investor. And again, it's something we've probably mentioned 20 times on past episodes here. But if they made that a test and anyone who really was determined wanted to become accredited, you then wouldn't really need Reg CF, Reg A for those investors anymore who could then go invest in some of these Reg D deals. Now, there's still other potential benefits from the disclosures there. I'm not saying it would go away, but potentially just shifts the dynamic of the investors in this market. So
I know the token people want that for sure.
Absolutely. And just the whole market structure bill with what they're talking about of, did they even end up using Reg CF, Reg A, or something else that they're coming up with, right, on the side of the SEC and with regulators and rule makers. That's something we'll be very interested and very on top of. We'll report it here first when it happens, so you can be sure of that. We'll end things there. Thank you everyone again for joining us. We'll be back here next week. And if you aren't already, head over to kingscrowd.com. Get our free newsletter. You can go to newsletter.kingscrowd.com. Weekly newsletter has all these great data-driven insights, charts, interviews with founders, and lots more. All right, we'll see everyone back here next week. Thanks.